And we know you just came from the Business Roundtable discussion with CEOs, which we'll get to in a moment. But first, on the stock market, which is tanking again, what message do you think the market is trying to signal here?
I think the markets are saying that, there is volatility, there is clouds relating to trade, there is tightening of the monetary policy, there is emerging markets that are also volatile out there, and there is this question mark about, growth prospects going forward. My sense is that on the latter point, it's a little bit overdone. 3.7% growth forecast for next year is not bad.
Globally?
Actually. Globally, yeah.
What about the U.S.? We are starting to see parts of the yield curve invert. Does that mean a recession is coming?
It's not there quite. It's getting closer. I see that. But, I don't see the elements of a recession in short order for sure. And we still have a pretty strong growth forecast for next year for the U.S.
Yeah, I was just going to ask what happened. I mean, consumer spending was booming. Confidence was high. We saw these growth rates that we haven't seen in years. Why that seems to be peaking out and slowing down now?
As I told you, I think it's, first of all, there is just more volatility now than there was a year ago. If you look at the VIX index, it's twice what it was a year ago. Second, I think that, from a baseline that is reasonably optimistic looking at fundamentals, economies, as you said, consumption is high, numbers are looking pretty good. There is that concern about trade and the trade tensions and rhetorics and threats and tariffs, those that have been applied and those that are being threatened, and the uncertainty as to how this is going to be resolved, which is weighing, I think, on the optimism of markets. Now, what happened over the weekend should be a good reason to have reassurance that the lead players are going to want to sit down, negotiate, and address the issues that have been bones of contention in terms of trade.
So you saw this weekend, and I know you had a front row seat, you were at the G20 in Argentina, as a breakthrough between the US and China, or not?
What was very different was that, I've done quite a few of those G20 meetings. And for the first time, I think all leaders around the table recognized that the rules of the road, the rules of trade have to be revised, that the WTO needs to be reformed, that the dispute resolution system needs to be improved. And that was not a position that they all had at the last G20 summit in Hamburg. So this time in Buenos Aires, it was common view, including from China, that there had to be changes, there had to be revisions, there had to be improvement. The question is, how fast will that come? And, that's where markets probably are impatient, and where they want results today, if not today, yesterday. Well, unfortunately, when you negotiate those big-ticket items, such as intellectual property rights, such as subsidies to state-owned enterprises, such as rents, such as, extortion of this or that, it's going to take a long time. It's going to have to be defined, understood in terms of scope, in terms of, how it's addressed, how it is sanctioned, how it is ruled.
Is 90 days a realistic time frame?
If people put their mind to it, certainly identifying the framework within which negotiations take place is probably doable. There has to be goodwill, there has to be hard work, and there has to be an understanding that not all issues will be resolved at once, because it's just really tricky detail. When you look at line items in terms of tariffs, it's monumental just looking at that small thing. So talk about defining what is protected by intellectual property, how rights will be enforced, how sanctions will apply, how the judicial system in each and every member will play out. All those are tricky issues. So having a framework would be, in my very humble view, maybe a starting point from which the parties can actually, with all the technical experts helping them, reach hopefully a consensus.